Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a Forex market analysis for you for April 6th through the 9th. We're going to see what's going on as we're into the second trading day of the week. Before we get into our analysis, we just want to remind you that this is for illustrative and educational purposes only. Also, if you haven't already read the book High Probable Japanese Candlestick Patterns, you might want to. We have a bunch in here that we're going to be talking about that have currently signals that are intact, some of them coming very close to their targets now. And you can get the book High Probable Japanese Candlestick Patterns available on Amazon.com in paperback and Kindle versions. Also, if you have not subscribed to our YouTube channel Forex Trading Unlocked or our Twitch channel Forex Trading Unlocked, please do so that you can stay in touch with us as we have new videos coming online. Alright, so let's take care of today's webinar. So we have the Forex-Trading-Unlocked.com website pulled up already, and from the navigation bar, we've already pulled up our workstation page. So now let's toggle down. There were some numbers today, but we're going straight to the technicals. Alright, so the dollar index has been a little mixed over the past few sessions. Today it is a little bit as well, but it's definitely taking a little bit of heat from some of our stronger components in the dollar index. We have a little bit of divergence, and right now I think what we are seeing is the pause for the cause. We have had extreme volatility. We're pushing highs in many markets. The stock indexes, we have the interest rates on their lows, meaning the longer terms, the 30-year. That seems to be stabilizing. Oil, however, after having stabilized and looking like it wanted to sell off, is now starting to firm back up. So we'll be looking at that also. So right now the dollar index, the dollar has been railing since the beginning of the first of the year, especially since the end of February. Very strong momentum to the upside. We're looking at right now any downside issue with the dollar versus most currencies is a corrective move right now. So we've been making higher move highs and higher move lows. So let's trade with the trend, because that is the right way to go. So Euro US dollar, the biggest component in the dollar index, had a 3 inside up buy signal. This is what we have here on this low. We had this red day, and then we had the following trading session was a small little harami. That right there is a harami buy signal. With the follow through on the third day, especially where it closed above the open of that first last down day, that's very strong and significant for buying pressure. So it's called a 3 inside up buy signal. Today, as of now, this morning we hadn't reached it yet. We are at the bottom end of our target range. $18.45, as you can see, has been breached. This is our first upside target, with $18.77 being pretty much the extreme. So if this is just a corrective move right now, this would be a nice area for this currency to run out of gas. However, it could still get all the way up to $19.71 before it turns, and that would still remain in the down slope over the longer term for the trend with the Euro US dollar, and that might be a good failure spot. So if the dollar bulls are really there against the euro, and if you look at the economy in the EU, and especially with the new lockdowns that are in place and COVID surging, it's hard to believe that the euro is going to gain too much strength versus the dollar in the overall run. Since we seem to have stabilized in the 30-year Treasury bond market, and oil to some degree has started to at least go sideways, that is helping to maybe give the euro a little bit of a lift in the short run. We are viewing this as a corrective move. So this buy signal was a counter trend move. It was made off of a lower move low on a weekly and monthly basis. So that's a big deal. So we're, like I said, we're in the very lower part of our initial target range. If this is just a short-term correction that's going to run out of gas fast, and you can see, like, right where it's now targeted into, this was a low before. So where it had become support, then it bounced, and then we failed, and then all of a sudden now is the question, is that prior support going to become resistance? We'll see. We'll see how today's session ends, and see tomorrow if we get follow through to the upside. Now let's take a look at some of these other markets here. Let's look at the British pound US dollar, the second biggest component in the dollar index. Now, while the euro is stronger versus the dollar today and pushing through resistance, the opposite is with the pound. And this is kind of interesting because I think it has a lot to do with the oil-related trade and the fact that interest rates are stabilizing. This initial break, remember the pound has been a vicious bull versus the dollar all the way up until the end of February of this year. As we start this second quarter of the year, it's very likely that we may start to go sideways, especially if oil starts to stabilize and interest rates start to stabilize and at least stop trending in a negative way, meaning that oil going to higher prices and then also interest rates going down, which is an inverse relationship. As interest rates go down in price, interest rates go up. So if that continues to happen, it'll be hard for the pound to get a rally off of a rising interest rate environment. But if oil continues to rally, and we do have a longer term price target of $100 a barrel for oil, if that should occur, then you're most likely going to see the British pound US dollar making new highs, meaning the dollar will be a bear versus the pound. Because of lockdown restrictions, because of COVID spiking in the UK, that is one of the reasons why I think you see the pound kind of going sideways right now. So the oil rally, which is helping to fuel the British pound US dollar bull, is definitely in play, but the lockdowns may be more severe. So I think that that's why you are not seeing this market try to make a run for new highs. And while today the dollar is actually starting to retreat a little bit, the pound is actually retreating versus the US dollar. So we could be set up for sideways. We planted a lower move low here. This was a piercing line buy signal. That's another high probable Japanese candlestick pattern. That's this bottom right here, where you trend down, and when you have a close that's above the 50% line of the last down day, that is called a piercing line buy signal. We had off of that, we made a lower move high, then we made a higher move low, and now we're making a higher move high. Now this is intraday basis, only on the hourly and the short-term daily, not the long-term daily, the weekly, or the monthly. Right now on those we are neutral to bearish. So we'll see what happens. We could be set for sideways. Our upside target from this initial low, we are part of a corrective wave higher that we are targeting $1.3949. Should we hit $1.3949, that still doesn't mean that we don't have room to the upside. The key area will be this last high here of around $1.4011 up to $1.4020. Anything above here, all bets are off. The bull is back. This corrective move to the downside will have been completed and confirmed already, and we'll be looking for this market to get up to $1.43, $1.44 in the longer term. This is if we have an upside breakout. The only thing I could see that would really fuel this would be a monster rally in oil. Remember, the higher oil goes, the better it is for Australian dollar, British pound, the worse it is for the Japanese yen, the better it is for Canada, any oil producing countries. So should we get a big spike, and especially get oil above $70 a barrel towards 75, I would bet dollars to donuts that we're going to see another surge in buying pressure to the upside with the pound US dollar. Now, a failure from this low that we planted just a couple weeks ago at $1.3664 definitely has extending this correction, because should we fall down below there, we would, be making lower move lows after a lower move high, which is indicative of what? A downward trending market. So remember, we topped out end of February. We broke down into the beginning of March. Then we started to bounce back up. We made a lower move high after a higher move low. So that was our first indication the market was stalling. When we took out that higher move low after a lower move high, that was this slide here. This confirmed our short-term trend is bearish. Now, is it a corrective trend that's going to be extended, or is this just the blow off that it probably needed anyhow because it's been rallying so strong versus the dollar? Time will tell. So we're looking for, once again, a challenge of this $1.3949. So the fact that we fell short doesn't mean we're not going to get a turnaround tomorrow. With oil prices up today, if I remember right, oil is now up a little over $1, and the bonds are up almost a full basis dollar, which is meaning rates are going down. They're easing a little bit. Oil is bouncing back, but it had a big sell-off yesterday, so it's kind of neutralizing. And I think that's what we're recognizing in the pound, because we don't have any really strong volatility. Now notice also that it is lower on the day, but it is off its lows, and it's almost 50% back. That's a big deal. Should the pound only settle slightly lower on the day, it's very likely that it's going to get a rally and follow through upside momentum. So this could be a little profit taking that you see in the pound US dollar. All right, let's go to the US dollar Swiss. The Swiss has fallen into our downside target from that high for our first corrective zone. Is it going to continue? Well, you took out this upward sloping support line holding the steep trend intact, so it could be setting up for sideways. Right now, bearish momentum is there. So the US dollar is weak versus the Swiss currently. Remember, this market's been rallying since the beginning of 2021. A decent correction is not out of the realm of possibility. We now are inside of our target zone of 93.44 down to 93.12. Do we have much more to the downside? Absolutely, we could. But it doesn't mean it's going to happen. So if this short-term dollar sell-off is going to wind down soon, we'll probably see a stabilizing here and then have a basing before we get another challenge of resistance. Now, should we continue lower here, we definitely could get down to this 91.72 to 91.02 area. Remember, we have a very steep rally that's been going on. And there's lots of issues where, you know, people are like, why is the dollar so strong? Well, it's probably because this is because of the EU with all of their lockdown implications, slowing of the economy, and basically another round of quantitative easing, which now the Swiss is helping to support. So if we take out this last low, remember, we've been making higher move highs, higher move lows, higher move high. We haven't taken out this. So if we take out this low here, this will be the key. Anything below here or above here keeps us positive. Anything below here will have us going negative. So as you can see here, this is going to be a critical pivot. If we do fail here, that's a higher move high, then a lower move low. It sets us up for neutral, not necessarily a bear trend. So be cautious. Right now the trend is a bull. I would say look more for wait for a reason to buy this market than to sell it. And we'll see how things are going. With interest rates in the U.S. stabilizing and coming off a little bit, that's another reason where you may see the extended sell-off with the U.S. dollar Swiss. All right, let's go to the U.S. dollar JPY, another oil-related, oil-problemed, plagued currency cross. So oil rallying is not good for the U.S. dollar Japanese yen, or is good for the U.S. dollar Japanese yen, because that is Japanese yen weakness because they have to import oil. So the rising price of oil means obviously higher costs for everything, whether it's domestic or foreign, when you're taking into account what's going on in Japan. Now, we have a downside area that we actually finally touched today of 109.69, with 109.39 being the extended bottom for this short-term correction. If this is just a little easement on the dollar before we actually get another big run at resistance for this dollar strength, then we're probably going to stabilize in this area. We could still fall back down towards this 107.93 down to 107.21. Remember, we had these upside targets. Like we hit a high of 110.96, just shy of 111 even, just over a week ago. We had that target that already in our sights months ago, but we didn't think we were going to get there until June. It's April, you know. So, and we maybe we were thinking it could manifest, but this rally has been very steep. So especially if we take out this 108.31 area, that's key support. It would establish a lower move low after a lower move high, probably coming down towards this upward sloping support line. So this area most likely will hold the market intact, and then we'll see at least a sideways basing, or we'll see another return to bullish momentum and then drive this market up above this 110.98 area and then get up really towards like 112, 113, especially if we see oil spike. If oil continues to bounce now and makes new highs getting up to say 170, or excuse me, not 170, to $70 a barrel, $75 a barrel, that will definitely add momentum to the US dollar Japanese yen bulls. So I'd be very cautious as a seller right now. Keep your money management principles very disciplined, keep your stops tight, Any whipsaw action to the upside is most likely going to favor the bulls. All right, so now let's see what else is going on in this sector of the world. Let's look at the Australian dollar, US dollar. This hit a head and shoulders pattern that was completed a week and a half ago. We planted a lower move low once again just a week ago, and now we are kind of trying to get a rally going. I think it's more of a base. If we get above this neckline, obviously, and take out this downward sloping resistance line, is it bullish? Well, we are coming off a lower move low after a lower move high. So until we take out this 78.46 area, it's going to be hard to be bullish. Does that mean we're going to take out the 75.32 and start going lower? Maybe. I'm looking for it. Right now I'm looking at this as sort of a corrective trend move. For the head and shoulders, we still have a downside target of 74.97, this line right here. 73.75 I think is going to be the extreme. Unless you have a very harsh sell-off in oil, it will be really hard to break this market down. Those are the key levels to watch. We'll see if we can extend this correction to the downside. New Zealand dollar, US dollar today was a little bit lower, but now it's coming back. Like I said, dollar is probably in a little bit of a corrective mode. This is hitting support. It has pretty much a lot of the same fundamentals as Australia does as far as what's keeping them strong versus the dollar or weak versus the dollar right now. This market has been making lower move lows and lower move highs. It's right now making a lower move high. If it turns back to support, I would be very cautious. A failure from 69.43 will press this slide down towards 68.5 down to 68.20, somewhere in that support band area. Not a major sell-off. We're not looking for a major slide like it did on this day. Upside potential, well, unless we get above 72.71, not really bullish right now. It's just a matter of coming into resistance to see where we can get a turn. We could start to go sideways very easily, especially if oil just continues to churn. If it's just bobbling between $65 and $58 and not really going, it's not breaking out to the upside, not breaking out to the downside, that becomes stability, even if it's fluctuating in, say, a $7 to $8 range. That's positive for New Zealand dollar, US dollar. So we'll see what happens. Right now, short-term bear. We'll see what goes on. US dollar, Canada. Bearish engulfing line sell signal the other day has us targeting this $1.2507 to a $1.2473 area. Overall trend is down. This high is a lower move high after a lower move low. The trend is your friend. It's an aggressive bear versus the dollar. Unless you were to see a big correction in oil, say the oil getting down to not just 55, but back down to 50, upper 40s a barrel, then I think you could see a spike and see us not only take out this $26.52 level, but get us back up to this 128 to 129 area, only if there's a big sell-off in oil. And then complementary to that would also be a big rally in the 30-year Treasury notes, meaning an easing of interest rates by the market. The commodity trade is definitely driving this one here. It could just run out of gas. Now, we had poked into this first target yesterday. Today, we're a little bit higher. It's probably because of oil. Should we still get another, if this is just profit taking today, where the dollar's under a little pressure and everything else is just trying to, take a little profits, then we should see a turnaround tomorrow. And remember, there are oil numbers that come out tomorrow. We have our economic numbers, which have not been so significant for the interest rate markets for the past year because we've been pretty much on a Fed basis that we know what they're doing. They are becoming more and more important. So we had unemployment last week. We'll see what kind of oil numbers we get tomorrow. If those oil numbers are stable and possibly if they get a sell-off in oil, well, then we'll see a return to highs. But if not, then we'll most likely see this little rally that we have going on here today fall apart tomorrow and then get down to this 124.73 area. For all of you tourists out there who have been planning on going to Mexico, it's getting more expensive is it because of spring break? No, just because the peso is going down versus the dollar. So right now it's just above 20 pesos at 20.15. Still, after a higher move high, we're establishing a higher move low, so we're basing, unless it gets down here below 1990 pesos to a dollar, I think you're pretty much set for a stabilizing, 20 to 20 and a half pesos for the next couple of weeks. If we set a base, we could possibly get back up to above 21 pesos to the dollar, but not much are we looking for as far as a trend right here. So let's go back to the Euro US dollar, or actually, you know what? Let's go back to the XAU US dollar. Let's look at the gold market. So if you can see here, as this market bottomed out the other day, that's right around when the yen also topped out. So besides looking at just the currencies, you got to look at what drives them. Here's the crude chart. Now, because futures are in delay, we can't show you what's going on today. This was as of yesterday. So you can see that where it bottomed out here, this is kind of where the Japanese yen topped out a week and a half ago. So US dollar yen was rallying, crude was railing, it was going, the currency was going up like this. Crude was started to go down, and that is when all of a sudden, boom, you had the turn. So let's look at this real quick for a date. So we have, when did this happen? So we had the second big sell-off. This was when you really saw a sell-off in crude. That was March 18th. So let's go back to here. US dollar JPY. March 18th. The first sell-off in crude, we started to top off here, okay? We still had one more run-up, and that, I think, is mostly because of gold. So, because you look at crude topped out here, this is when we had the sell-off. It confirmed weakness, but then it was bobbling. Looks like it wanted to go up, and it's more overdone on the yen side than on the crude side. So this was giving us our first signal that you might start running out of gas on that US dollar yen rally. But then we also add in the gold trade. So we go to if you look at where the high is right here, we are now, what was it? It was February or March 31st. Let's go to XAU USD. March 31st. This is when gold bottomed. Okay, so now gold is rallying, and the yen has been basically following gold and oil for the most part. So now as gold is starting to rally, that's starting to ease a little pressure. So taking the oil trade off the table with the US dollar yen. So we're looking to see if gold can get above the 1755 mark. If it does, we're looking at a rounded supported bottom here. Not like we're looking for a major gold rally, but that would start to most likely add towards our momentum to the downside for this US dollar yen. So we might see an extension of the correction and dollar weakness come because of gold strength. Remember that the dollar has really been rallying versus most of the currencies. Why? Because the flight to quality markets have been going down versus the dollar. Think about it. Where is flight to quality? Swiss franc, the Japanese yen, depending on what trade zone you're in. Gold, especially if you're talking about the US trade zone or any trade zone. Also, where do you go before the currencies when you go to flight to quality? You go to the treasury bond market, the 10-year and the 30-year market. Those have been going down significantly, finally starting to bottom, just when all of a sudden this is topping. If we are starting to see a short-term, even just consolidation on these commodities and financial commodities, remember, the interest rates are a function of currency pricing. Commodities are also a form of currency pricing because you have inflation is a number that impacts interest rates. If interest rates are impacted by inflation, then they impact the currency. So there is a constant little gearing of this one cog and another cog coming in and out depending on how fast or slow the market is moving. If it's overheated, if it's redlining, or if it's moving at a normal pace. Volatility is in normal bandwidths. You know, these are things that we are always paying attention to. They're the best indicators for the market. So right now, they're helping us get into these target zones. But we have to now see what happens, especially with the oil numbers tomorrow, whether or not we get a spike, uptick in oil. Let's watch the gold market. If we continue to get an uptick in gold, US dollar yen should start to go down. If the oil numbers come out good tomorrow, meaning bearish good, then you'll see a sell-off in crude taking away today's gains. Should that happen, US dollar yen should start to go down. And also, if gold continues to go up, US dollar yen should continue to go down. You know, and the dollar will be under pressure versus most of the other currencies as well. Now, are we long-term expecting these to be turns in the interest rate and the gold market and what have you? No. Let's go back to the gold market. Remember, XAU still, oops. And this is a good lesson for your currency traders to watch these things. We bottomed out here at the beginning of March. We had so it's basically a double bottom. This bottom is a little bit higher than this, so we didn't make a newer move low. We made a higher move or a lower move high, and now we actually technically have made a higher move low. Barely. This is more like an almost even neutralized thing. So if we need a breach of this current higher move or lower move high to confirm strength. If we get above there, well then we're sparking higher move highs, looking for higher move lows, and a short-term trend to the upside in gold. This would start to hit the dollar, and then we can start to see other markets like the euro, US dollar continue to rally, the pound US dollar to reverse and start to really rally again, and then we'll see a big sell-off in the dollar index as well. So it doesn't look like we have any questions on the chat. I want to thank you guys for all of your time today. One last couple things. If you want to learn about these trading signals, how to trade them with an actual methodology, read our book, High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and in paperback version. Or if you're an Amazon Prime member, you can read it for free. So that's where you can access it. You can go to our Forex-Trading-Unlocked.com website. From the navigation bar under Services and Courses, you can get a little free read of the book as well. And also, if you haven't already done so, please subscribe to our YouTube and Twitch channels and pass it on to your Forex and online trading buddies. And we will see you soon. And also leave some comments on the videos, because then we'll respond to them and get back to you as well. So you have a very good day. I want to thank you very much. I'm Teddy Keckstedt from Forex.